Welcome back to the CNBC special report. It was just 3 short months ago we were worried about crude oil hitting above $110 a barrel. Well, tonight, U-turn here. Crude oil has dropped below $80 a barrel. CNBC's Sharon Epperson joins us now with the details. Sharon.
Melissa, it's all about sentiment. That is what traders are telling me tonight. They are trading on the global risk unwind, and it's hitting oil prices more than any other asset class. If you look at where we are right now for crude prices, we hit a low tonight below $76 a barrel, the lowest price we've seen in 10 months' time. Brent crude prices below $100 a barrel, the first time we've seen this since February. Keep in mind the losses have been extended since we did get that data from China on its inflation and producer price index being hotter than expected. That is something that has added to the sell-off. But it's not only in oil. We're also looking at lower prices here for copper at a 3-month low. Silver also lower. And the concern is perhaps that we could see tightening continue in China. In any case, it's more of an opportunity now for traders to go back to their focus on unwinding risk. Where is the beneficiary? Of course, it is in the gold market, up about $30 tonight. Right now, we're looking at gold prices up $17.42, hitting a high of $17.46 just moments ago. When we see the big slide in crude oil, of course, consumers want to know, when is it going to affect me? We have seen oil prices that were trading at $100 a barrel at the end of July, now down 20% in a week. Brent crude prices down 16%, and RBOB gasoline futures, that's really what your pump prices are based on, also down about 16%. We haven't seen that translate in the pump price yet. We're only down about a nickel in 1 week's time. The retail price for gasoline is still about $3.66 a gallon, but we will likely see prices start to fall quickly. Tom Closa at Opus says look for prices at $3.25 a gallon by the end of the month, and we could even see in some areas $3 a gallon. That's what the consumer wants to see. There must be some silver lining here, Carl, in all of this, and perhaps it's going to be in those lower pump prices. Yeah, amazing that we might actually see those numbers, although this is not the way I think most people wanted to see it. Exactly. Sharon, thank you very much. Sure. China, as we've mentioned, just released some inflation numbers, a little higher than expected. Joining us tonight, CNBC contributor John Rutledge. He's a former Reagan economic advisor and honorary professor at the Chinese Academy of Sciences. Donald Strassheim is senior managing director at ISI Group, and Zachary Karabel's president of River Twice Research. Gentlemen, good evening to all of you. John, let me just ask you something based on what's trading right now, and that's South Korea, down nearly 9%. Circuit breakers have kicked in, according to one official at the Kospi, considering banning short selling. Is there any reason why Korea should be notably weaker than other markets?
I don't think so, other than the fact that it's much easier to drive a smaller market down than a larger one. And in this case, the Korean markets have taken the brunt of a speculative attack. Reminds me a little bit about what happened early last week with some of the bond markets, when it was very clear that the hedge funds were selling off the bonds. Yeah. But I think the Chinese numbers suggest that maybe not all of the world is actually shrinking at the moment. Yeah, I wonder, Don, is it possible that they might actually increase reserve requirements, or God forbid, tighten, knowing what we know about the rest of the world economy? You mean the Chinese?
Carl?
Don?
Carl, I think there is one or none in terms of further interest rate hikes and required reserve ratio hikes. This economy is going to be slowing around the world. We see that. Commodity prices are going to come down a long way. The CPI was 1/10 above the consensus. That's rounding error. The PPI was right on the consensus. And with oil, as you just mentioned, and soft commodities coming down a long way in the second half of this year, the inflation story in China is going to get much better. That's going to make China look a lot better in many, many ways.
Exactly. Zachary, would you agree with Don in that China is seeing a slowdown right now, one that will continue? And if so, Zach, you have been in the past a big advocate of buying Chinese consumer stocks, domestic stocks, levered to the domestic Chinese consumer. Would you still stand by that, even if we're seeing this broader slowdown?
I mean, look, there are two things going on. One, to John's point, is I don't want to be in the middle of what I think is right now purely a global financial correction, sell-off, crash, and then simultaneously talking economic arguments about what's going on in the future. I don't think, I think what's going on right now is the former, not the latter. And China's PMI, PPI and CPI data, suggests that this is an economy that is continuing to power forward. You don't have that kind of inflation number, and you want a real 4 to 5% inflation number in China in order to increase that domestic market. I think this would have to be significantly more heated for the Chinese government to do anything. And I think slowing, as I think Don would agree, is a pretty relative term when one is talking about China.
Right. John, what's the bigger worry? That the rest of the world slowing down hurts China, or that China slowing down hurts the rest of the world?
Oh, it's the former, definitely. And, you know, what we have to keep in mind, these numbers actually are, we're right on consensus, 6.4, 6.5 on the prices. But also at 7 o'clock tonight, or 10 o'clock Eastern, came out the industrial production numbers. I don't have the exact number, but the expectation was 14.5%. So the average industrial company in China, unit volumes growing 14.5%, and prices are growing 6%. They have a 20% top-line revenue growth number. So cash flow, cash flow, cash flow, which is really how you survive a business, is actually doing okay. So it's the former, not the latter, to your point, Carl.
You know, Zach, I just want to know, is this a sell-off, a correction, or a crash? You mentioned all three.
You know, it's definitely more than a correction. It's somewhere hovering right now between a sell-off and a crash. I think this is a crash. I mean, whether we're in December of 2008 or late October of 1987 is the one thing I think all of us are trying to grapple with right now. And you kind of, you know, if it's going to be October of 1987, you want to have enough cash because then it's going to snap back. If it's December of 2008, you know, you want to not jump right back in tomorrow because then you've got a few more months of this. I don't claim to know the answer to that.
Donald,
this is a crash, but in China, it's a crash you can walk away from.
Right.
John just mentioned 15% industrial production, 20% income growth. China is going to be, whether, and we all want it to be so, the engine of growth over the next year. It's been the agent of change. It's not going to be America. It's not going to be Europe.
Right.
It's not going to be Japan. China is the place to be.
It may be a crash, but right now, officially, it is a correction. China's Shanghai Composite is down 22%, including today's losses from its November high. Hang Seng is down 24% from the November high. Zachary Karabell, I want to ask a question that may seem almost inappropriate as we see the carnage across Asia, and that is, could you fathom stepping in to the Chinese market and buying at this point, whether it be individual stocks or the market itself?
You know, at this point, I think it's just as fair to do the U.S. names that have been battered as it is to do the Hong Kong listed names that are being, as we see, 7.5%. A lot of those names are obviously being battered 10% overnight. You know, my strategy in this is to stay enough in it to not be out of it when these rebound. And again, I don't know if that's tomorrow or next week. I don't know if we got another 10% down or not. But I do know that the intrinsic fundamentals of these companies are not 25% lower today than they were a week ago. And in fact, the China data shows that, in fact, they're probably 15% higher.
At least based on what we know right now. All right. Gentlemen, thanks to you all. John Rutledge, Donald Straussheim, and Zach Karabell. S&P futures, by the way, down more than 3%. Coming up, banks are among those feeling the biggest pain from today's drop. Of course, Bank of America shares down over 20%. You're watching this CNBC Live special report, Markets in Turmoil.
I think S&P has shown really terrible judgment.
Literally and figuratively lowering the American financial flag.
All the gains that we had in the S&P 500 from quantitative easing 2 are gone.
Gold hitting another record high.
Why would you ever question the credibility of the United States government?
It just means it's more risky today than it was a year ago.
Markets in Turmoil. Continuing coverage on CNBC.
Join the conversation on CNBC. Like us on Facebook and follow us on Twitter. Wherever you are, get breaking news alerts and headlines that matter to you. Comments, tweets, and the power of CNBC.
Tomorrow on Squawk Box, we'll talk more about the debt downgrade. We've got Steve Forbes, Steve Ratner, and Dick Beauvais.
I suspect Beauvais will say something outrageous, but it will actually probably turn out to be accurate.
Also, guys, it's a Fed meeting day, and guess who we'll be talking to about that?
Larry Meyer.
Ding, ding, ding.
They said I couldn't win a fight, but I did. They said I couldn't fight above my weight class, but I did. They said I couldn't get elected to Congress, but I did. Now, I'm trying to make it in music. Sometimes when we touch, millions of hits.
Flick, stack, and move between active apps seamlessly. Only on the new HP touchpad with WebOS.
Multigrain Pops.
I hear the sounds, I hear the sounds, waking me up, they don't back down, and the voices climb.
Something unexpected to the world of multigrain. Taste.
I'm feeling the light, I'm feeling the light, my eyes can't wait until
Delicious Pringles multigrain. With a variety of flavors, multigrain Pops with Pringles.
This is our beach. This is our pool. Our fireworks. And our slip and slide. You have your idea of summer fun, and we have ours. Now during the summer event, get an exceptionally engineered Mercedes-Benz for an exceptional price. But hurry, this offer ends August 31st.
We share. Shop from anywhere. And are always connected. We live in a social world. Isn't it time we had a social currency to match? Membership rewards points from American Express. Use them to get the things you love from Amazon.com, Ticketmaster.com, and more unexpected places. They're a social currency with endless possibilities.
The biggest loser in the Dow and the S&P today, Bank of America down 20%. CNBC's Mary Thompson here to explain the violent move lower.
Well, financials were the weakest among the week in Monday's trade, falling 10% and putting the S&P financial sector in bear market territory. Financials pressured by concerns about a double-dip recession and the continued low interest rate environment, which will continue to pressure banks' profit margins. The hardest hit, one of the biggest, Bank of America falling 20% as AIG launched a $10 billion lawsuit against it, and as questions about its capital position persisted. Bank of America maintaining it doesn't need to raise new capital to run its businesses, but investors aren't convinced. CEO Brian Moynihan will be answering investors' questions on Wednesday, with a growing number of investment professionals questioning his credibility. They say the bank's inability to ring-fence its mortgage losses and the Fed's decision to reject B of A's request for a dividend increase, even though B of A says its capital plan is sound, they say that is not boosting confidence among investors about a management team that B of A maintains is the right one.
Our thanks to Mary Thompson on that. And David, let's just chat about Bank of America just a little bit, because obviously it's the biggest bank in the United States. A lot of people have accounts there.
Yeah, largest single depository institution.
Exactly. And it shouldn't be the deposits that people are worried about.
No,
this is a completely different issue.
It is a different story. I mean, listen, many people can look at that decline. That was a stunning decline today.
It's a bear market
no doubt that
alone.
it's scary to see a 20% loss of market value in this company. Going to be a very important day on Wednesday for Mr. Moynihan in terms of trying to engender some confidence in the institution again. Whether they need to raise capital or not, there's clearly a lack of confidence in his leadership and in essentially some of the things they've been saying. I mean, I would note, last I looked, they own a stake in China Construction Bank that's worth about $20 billion right there. This is a company now with a market cap below $70 billion at this point.
Now you're talking asset sales or alternatives to raising capital.
You do wonder whether if they at least have those levers they can pull, because there were rumors today, oh, they got to go out and raise more capital, which doesn't seem to make a great deal of sense. Bondholders may want them to do that, but at the end of the day, you know, why would you sell stock at $6.40 if you didn't have to? Should also note these preferreds. Bank of America preferred, a number of other preferreds getting crushed as well. I did know a number of investors today who are moving into some of those names. They have high yields, and they don't believe ultimately this is going to be anything like a repeat of 2008.
Although some of these banks are going to actually have to be financing these preferreds. There's going to be a wave of this going on in the very near future, actually. And I know that's the people who look at preferreds of financials are actually taking that into consideration.
And obviously, Bank of America not the only financial down today. If you took a look at the XLF, which is the ETF that tracks the S&P financials, that was a major loser today. Herb, and you're taking a look at ETFs in general in a day like today. I would imagine the only one was GLD,
it's not, well,
SLV.
The way I'm looking at it is a little differently, because we've been here for the past year raising questions about whether ETFs are actually going to exaggerate this market's move, cause problems. Well, this is not a test of the emergency broadcasting system. This is the